Good evening, I'm your host bringing you tonight's market update presented by CBN Financial. Here's what investors need to know heading into tomorrow's session. U.S. equity markets extended their rally today despite the ongoing government shutdown, with all three major indexes reaching new record highs. The S&P 500 added about 0.1%, closing near 6,715.35. The Dow Jones rose 0.2% to roughly 46,519.72, and the Nasdaq Composite climbed 0.4% to 22,844.05. Driving the gains were surging technology names, bolstered in part by news that OpenAI forged new infrastructure partnerships in South Korea and that several chip makers may see increased demand. Among individual movers, Intel rallied on reports it could add AMD as a foundry client, lifting AMD and other semiconductor stocks. Fico jumped after announcing plans to provide credit scoring directly to mortgage firms, putting pressure on traditional credit bureaus. In contrast, Occidental Petroleum tumbled to 6% after Berkshire Hathaway unveiled a $97 billion bid to acquire its Suxicum chemical unit. On the macro front, caution remains. The U.S. federal government entered its second day of shutdown, which may delay key economic data releases and cloud the Fed's decision-making. Analysts warn that if the shutdown drags on, growth could be shaved by 0.1 to 0.2 percentage points per week. Private sector data is already showing signs of softness. The latest ADP survey revealed a net loss of 32,000 jobs in September, further fueling speculation that the Fed will pivot toward rate cuts. In global markets, sentiment was broadly positive. Asian equities climbed, with South Korea's Kospi up to 9% following chip supply news involving OpenAI, Samsung, and SK Hynix. European markets opened higher, with strength in tech and industrials. The dollar weakened modestly, bond yields eased, and commodities like oil and gold showed mixed moves. Talkways for investors / tactical views: high conviction in AI/semiconductor exposure. The market is clearly rewarding technology names tied to AI momentum and infrastructure rollouts. Investors may look for opportunities in leading chip makers, foundry plays, or firms with direct AI exposure. Beware of stretch in valuations. With indices at records, sentiment is bubbly. Any macro surprise or prolonged shutdown could trigger a pullback, especially in more speculative names. Monitor policy and data flow. Because the shutdown may delay official releases, the market could become sensitive to any delayed or unexpectedly strong/weak data. The timing and magnitude of potential Fed rate cuts will remain a central lens. Balance is key. Diversified portfolios with exposure to growth, but hedged with quality defensive names or sectors that benefit from easing yields, e.g., select industrials, infrastructure, or dividend plays, may help manage volatility. That concludes today's update. Stay tuned, we'll continue monitoring the shutdown developments, macro releases, and earnings surprises.